Hello and welcome. My name is Joe O'Mara. I'm the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by David Butler, who is the CEO of Seraph Aviation Group. David is joining us for the purposes of our 2022 Leaders Report. And I should say that we're recording this 3 days before Christmas. David, thanks again for giving us your time and insights today. Before we get into the meat of the questions, do you want to tell our watchers just a little bit around Seraph?
Sure. Well, thanks, Joe, and great to see you again. Kind of a very fast 12 months for all of us. I can't believe you've been introduced so quickly. So just for the listeners to talk a little bit about Seraph Aviation Group. So Seraph Aviation Group is a specialized aviation asset manager. Our business is a unique blend of aircraft management services and capital markets expertise, all of which is underpinned by a state-of-the-art technology platform. In terms of our business and what we do and how the year has been, currently we are managing, as an asset manager, managing close to 100 assets for 17 clients across the world. Those assets with a value of just under 4 billion.
That's great, David. And can I ask, before we get into it, I'm really going to be interested around investor stuff in a little bit, kind of a level setting, right? How have you found we've come through such a challenging 21 months, but we've clearly seen signs that the recovery is happening? A little bit 2 steps forward, 1 step back. But how have you found airline customer performance evolve over the course of 21?
Yeah, so I think 21, look, if we look at this in a number of ways, first of all, if you take our business, and again, like every business, we set out at the start of the year where we want to get to, what we want to achieve and budget. Overall, this has been a very, very strong year for the business, and in particular, the second half of the year, we've seen a lot of activity. We brought on a number of new customers, and just generally a lot more happening from a transactional point of view in the market, be it lease extensions, placement of aircraft, or disposition of aircraft, which is very positive. So we had very good momentum. I think, Joe, if you even go back to the start of the year when we spoke and we were talking then about what had happened in 2020 and realistically what might happen in 2021. Well, when we entered this pandemic, we know that the aviation space was really on a continuous cycle of growth. In 2019, we saw very, very strong overall aviation revenues, north of 870 billion. Clearly, we had a significant drop down into the 300 range as a result of that initial very difficult period of the pandemic and how businesses were scrambling to adjust their models or get through it as best as possible. As we come out of 2021, I think we've seen, generally speaking, albeit the last number of weeks, a number of challenges around Omicron, very, very good growth and really moving back, and the story of getting back to the 2019 numbers, moving in the right direction, to the point of taking a general view on 2022. Where do we see those revenues getting to? We would have said in the range of 80% back of where we were in 2019. Now, of course, the caveat of that is, what are we going to see coming out of Omicron? There's a view, a number of different views around it. One, that it's something that we'll work through over a number of months and get back to growth. But fundamentally, we know there's going to be steps back on this path back to where we were. I think everyone's clear on that. But the most important thing for all of us, and you do hear this across the industry, and it's very factual and objective, we know that the consumer wants to fly once restrictions are lifted. The minute we lift restrictions anywhere in the world, we see a surge in travel as well. So the underlying fundamental is still strong. I think what's also very critical and a really important part, I think, in 2022 is where we are from a vaccination point of view. We know that areas of the world that have been stronger in vaccination uptake and allowed removal of restrictions have seen that recovery. But this isn't a level recovery across every region. We know it's a recovery in different parts as well. And I think when you step back again and say, okay, 2022, how do we look by region? Where are the more worrying areas, for example? I think we all know there's challenges. Clearly, Africa, we know there's challenges. the vaccine uptake has been very low as 10% if you look across the continent. Some countries slightly ahead of that, others actually behind. Ethiopia being a great example. That's going to be very challenging in terms of getting getting Africa back to the levels it was at. Southeast Asia is a little bit different because, again, you do have a mix of certain countries performing better at the vaccination rate, but then you've got the added complexity of carriers that are heavily dependent on long haul traffic as well, and some of the bigger global players that we know about there. So, there are a number of areas, for example, where there's obvious concern and we think it will take time to come back to 2019 levels. But then the flip side of the coin is, of course, everybody is aware we've seen some of the biggest domestic markets in the world already back at where they were in 2019. And I keep referencing 2019 because we see that as sort of the bellwether year. And in particular, of course, North America, where even with Omicron over the last number of weeks, we've still seen capacity forecasts in Q1 holding relatively around the levels that they were in 2019. So, look, again, as an industry as a whole, we've gone through this extraordinary change in 2020 of this massive drop off in revenues. And of course, not only on the revenue side, the profitability. We saw the industry take the largest hit it has ever seen of almost 140 billion loss in the course of 2020. Currently, where we see that for 2022, again, this is without a large seismic shift or some shape or another, that could be back as that gap could have reduced to the low, teen figures, 12, 13 billion, depending on what report you look at. So in summary, Joe, there's no question we're on the path to recovery. The path to recovery is happening faster in certain parts of the world than others, but ultimately we're moving in the right direction. But clearly the rollout of vaccination and an equitable rollout is a critical part to this to avoid what we're seeing at the moment in terms of the development of new variants, which has a negative effect on the industry.
And David, all that I totally agree with. You look at then the dislocated market, as you say, where you have parts of the world from an air travel perspective performing an awful lot better. How are you assessing new transactions or the opportunities that you're seeing? So do you think we're going to see, is it Airline 2.0, I've got a clean balance sheet and I try and go again? Or are you coming at it with a geographic perspective and saying, well, I'm going to focus on US carriers because domestic's back? Where are your thoughts around where the opportunities are for new transactions?
Yeah, so look, I think there's a number of different layers to that. So when we look at, and again, you have to look at the context of our business. We are an asset manager, per se. We represent the client. And of course, we give them a real insight to what is happening in the market, but more importantly, where we see the market going. I think when we talk to clients and investors, we say, look, the recent data, and I think this was very much supported, Joe, by the relevant earnings presentations from the larger leasing companies for their Q3 presentations. There was a lot of underlying positives there. We saw a lot of talk about, in some cases, asset prices getting back to growth. In certain cases, now we're talking here obviously very much on the narrow body side, particularly A320neo, quite a bit mentioned in relation to 737 MAX, but you're seeing asset values come back and also lease rentals equally as important. So there was a general feeling of, right, there's been real progress made. Where that's relevant for ourselves is, of course, is what's the opportunity in the future for a client to deploy their capital? Is this the time to get into the space and really ride the growth for the next number of years? So certainly we see opportunities on the asset side in particular. I think if you're taking a more, if you're talking in terms of airlines, you can't really speak about airlines without looking at what has happened over the course of this pandemic, because there has been a fundamental shift in how they're structured effectively. We know and have seen, yes, there's been a significant amount of distress for airlines, and we've seen over 60 that have gone through effectively a bankruptcy or a restructuring process. But where we are today with the airlines is, even if you took a view, Joe, and looked at the top 100 airlines in the world, and there's been a number of recent reports done around this, one incidentally by Airline Economics, they are showing that when you look at the balance sheets of those airlines, and many of these are top tier credits, ultimately the level of debt they've had to take on has gone from in the range of the high 300s, around 390 billion, up to the high 500s, that their debt to equity ratio has significantly moved from around 2.4x to 5.3. So the challenge we have, and when we look at analyze assets and we look at the airlines and the credits, is you have to understand with the airlines, that ultimately their balance sheets they've taken on this debt. They're relatively tight from a liquidity point of view, or in some cases, not all of that 100, but quite a substantial portion carrying, really, really thin liquidity. Further shocks could result in further distress, which ultimately leads to restructuring, as we know, and bankruptcy. So I think, there's definitely opportunities. There's a lot of people looking, as we know, narrow bodies is a huge focus at the moment, very specific around a number of assets, with the expectation that more on wide body, etc., certainly further down the line, and not something that we would be advocating for our clients to enter into at the moment.
And that balance sheet stress has clearly led to an increase in popularity around the leasing. So we would have seen, at the outset of the crisis, sale and leasebacks of on-balance sheet assets, and then we've just seen more and more lessors step in to fill the sale and leaseback hole. And that 50% threshold, I think there's an acceptance it has been breached in relation to the number of leased aircraft. And I'd say some of the lessors are incredibly bullish about saying, well, look, we think that's going to go, or will go to 60 this year or next, and has the potential to stay there. Your thoughts on whether the pandemic gives rise to a sustainable step change in that percentage of leased aircraft?
Yeah, I think I would agree. Some of the commentary you've obviously been getting from, I would imagine that's across a wide synopsis of the leasing community. The fact is the leasing market share has been on a constant growth path, Joe, and really you've touched on it there. We've talked about it. Balance sheet stress for the airlines. They need an alternative solution. So as we said early on, we saw a significant portion engaging in sale and leasebacks. Obviously, the lessor community playing a huge role in that, but also the leasing community stepping in to deal directly with the OEMs and take on some of the order book that the airlines just simply can't bring onto their balance sheet. So I would certainly agree with the view that this is a step change, and you're going to see, there's a view out there we could be pushing towards the 60% mark in the not too distant future in terms of market share on the leasing side. And I think that's absolutely the case, because what we've talked about today as we sit here in December 2021 and where the airline balance sheets are, that's not to say they won't have to take further debt on through the course of 2022, particularly as we know there's going to be the odd step back, and we're seeing that in terms of Omicron at the moment. So the leasing community, I would just say as well, I think what this pandemic has shown, when this hit us all in March 2020, and there was a general fear for where this was all going to go, I think the one thing that's emphatically come true are two things. We know the key thing here is consumer demand to travel. That's great. I think it's clear, and all the data proves it. But also the leasing community and the lessor business model has been shown to be incredibly robust and able to sustain what is, the greatest challenge in the history of the leasing community. So I think absolutely, we are going to see a change, and even how the lessors engage with the OEMs will place even more importance on the leasing community as ultimately the customer.
Yeah, I think I fully agree, and that you're talking about that resilience piece has really been so strong. Back to a little bit the government debt, but showing, you say, that leasing model is a step removed from the coalface, and even where we've had a grounding of global fleets, it's stayed robust and been able to manage liquidity. The challenge we continue to see is just how competitive the environment is. And if you look around lease rate factors, which aren't the only metric, right, in relation to returns that you can see, anecdotally, what you're hearing is, there was probably a risk premium bounce coming directly out of kind of, maybe the second half of last year. That seemed to have eroded, and pricing's probably back where it was pre-COVID. Would that reconcile with what you're seeing? And is the market as competitive as it ever was?
Yeah, it does reconcile. And again, I think there's been a lot of interesting data coming out over, particularly in this quarter, excuse me, as to some of the transactions we see in the marketplace. Look, ultimately, Joe, we know particularly in the early part of this crisis where a lot of capital came in. So first of all, we saw, again, to go back to the leasing platform has been so robust, their ability to raise capital really hasn't changed through that, be it people shoring up their balance sheet or indeed merger and acquisition activity, which clearly we've seen some very sizable ones completed during the year. But what we saw was obviously capital coming in and really going after a specific group of investment opportunities. And we all know what that is, a particular type of asset, strong credit behind it, young modern aircraft. So really focusing on a niche. We do think in time there will be an element of equilibrium on that, where people are chasing higher yield. They may move back towards, there are going to be opportunity in the midlife space. I don't think there's any question about that. So there'll be a relative normalization. But what I found really encouraging through the data we've been looking at over the last number of months is, as you say, what has happened on the asset values and also on the lease rate side as well.
That probably speaks to, David, that trading environment piece, as you say, like trading environment pretty dead in 2020, speaks to what you were saying at the start. Very active second half of the year. It seems as if those portfolios and opportunities and on that midlife space are coming back, and logically follows where you have the large lessors looking at new sale and leasebacks, looking at order book, focused on a younger fleet, haven't divested in a very real way in 18 months. Are you expecting significant trading volumes in the early half of next year?
Yeah, I think for all of us, Joe, the caveat, of course, is what we're seeing in the last number of weeks and a kind of reaction to Omicron. And we know, whilst of course, we all need to be very cognizant of what happened there. There's clearly been, you could argue, in some countries, an overreaction with an immediate case of let's shut down travel. And we saw what happened in South Africa. Okay, that's simply not the best way to approach this. And I bring that up because ultimately, without that, we would have been, I said, much more bullish on 2022. There's a general view, will that delay things by 3 or 4 months in terms of what's in Omicron? But certainly, over the last number of weeks, we would have taken a view that we will see significantly more trading in 2022. We do think there are investors who have done very, very well from looking at specific types of midlife assets and the opportunities there. And there's also a natural attrition from the leasing platforms, as you say, of bringing in, constantly updating their, upgrading their customer base and the aircraft type to retain a low fuel efficient fleet, and opportunities around the midlife space, which we absolutely expect to see in 2022.
And one channel that's obviously been important for that trading piece and secondary market has been Aviation ABS, a market you played in the past, in the not too distant past, around your Raptor vehicle. Have you been, one, surprised at how quick Aviation ABS has come back, noting that maybe the equity market's not back in a very real way as of yet? And two, do you think or perceive that there have been fundamental changes to the structure of the deals that have been done this year versus pre-COVID?
Yeah, so I'm not surprised, and I think back to my conversation with 12 months ago, where obviously the marketplace had shut down in terms of what was happening on ABS. Again, you go back to 2019, over 10 billion of issuance is done. We're sitting here with a week to go to Christmas, breaking through the 8 billion mark in 2021. And the reason I'm not surprised is because ABS has played a really important role within the industry. They were a very, very positive vehicle in allowing lessors really to give them a way for portfolio management and how they address, in particular, midlife or more aged assets, and how they handle risk on their balance sheet as well. So again, to me, sitting here today, whilst that figure is fantastic, 8 billion, bar some seismic shock for 2022, I certainly in the business wouldn't be surprised if we saw ourselves getting back towards the 2019 levels next year. To your question of has there been a structural change, I don't think so. What we've seen, and I will say we've seen a further shift in Q4, is, look, yes, certainly depending on the collateral, there may be additional protections to note holders. I think that is the one thing we've certainly seen coming with ABS is coming to the market. But what's been really interesting in the last 3 months is we're now seeing where previously the ABS were very focused on the asset type, the underlying credit, and in many ways the aircraft manager. We're now seeing, certainly in the issues in Q4, we're getting that movement back where we're seeing some coming to market with a few more midlife assets or even older. Even some of the leases that we're seeing on those ABSs, some coming to end of life with a release to be achieved in time. And the market has been open to it. Of course, it's all baked into the pricing. But to me, that acknowledges, I think, the overall investor base is acknowledging that this is a very important tool to aviation. And as I said, we would take a very robust view in terms of what it will achieve in 2022 as well. Now, the final piece we talked there, of course, is what happens around from an equity point of view. And the one thing I would say there, Joe, is what we've noticed over the year is equity investors. I think where we do believe we will see this coming back next year is that we've seen equity investors play in lessor EETCs. So that would give us confidence that, yes, at some point in 2022, we may see possibly new issue deals involving equity, but also the placement of e-notes that some of those existing issuances held on to. So, we think the ABS space is very, very positive, and particularly we talk a lot about investment grade lessors who have just shown, have done incredible deals through the course of the year at very attractive rates. The ABS market plays a very important role for those non-IG rated businesses as well. It really is another avenue, as I said, for portfolio management and really managing their balance sheet as well.
And shifting gears slightly, David, and looking at the existential crisis we have as societies around climate change, and the ESG focus in aviation has just increased exponentially over the last few years. As you think about ESG in the context of aviation finance, can I just get your thoughts, right? Because, is it actually having, and I'm very curious in this, a real impact as of now when you look at, you're an aviation asset manager, is it having an impact on your business as of now, either on the investor or on the debt side? And if not, how soon do you think it'll have a material impact?
Yeah, so look, ESG, sustainability, before we came into this crisis, let's be honest about this. This was the absolute hot topic facing aviation. There was a huge amount of commentary around it. And not just something affecting one participant. It's across the board, whether you're an asset manager like ourselves, a lessor, OEM, supplier, customer, this is always there and has come back very, very strongly. So I think it's fair to say in 2020, everybody was very focused on their own business, how we get through this crisis, making sure we have you survive and thrive as best as possible. But sustainability is absolutely a hot topic, and something when we speak to investors that invariably they absolutely want to understand our view on it, where aviation is going, and how aviation is going to meet the challenges ahead. Because you can't get away from the facts of where we are today, Joe. And if you take a view of the last normalized year, and again, I keep talking about 2019, aviation generated over 900 million tons of CO2 emissions. So clearly, to get back to that goal of carbon neutrality by 2050, that is a massive, massive task. So what we find with investors is they want to know, well, what is aviation doing about this? There's different types of investors coming into the world today, even as a new generation of investment and capital managers come through. So we talk to people a lot about understanding what aviation is currently trying to do, but ultimately what we think the solution will be in the future. And as we all know, there is no silver bullet to following this. It's going to be a series of actions across a number of areas. I think if you go back, what impact has the pandemic had here? And I would talk not necessarily in order of importance, but one obviously is the technology side. The reality is, Joe, 85% of commercial aircraft in the world today are not what we would term modern aircraft. So there's obviously massive room for growth in terms of modern fuel efficient aircraft being brought through. And that is clearly the leasing community, the airlines, a lot of work has been done around that to upgrade flights. So the positive coming out of a pandemic is a number of those very aged aircraft that were not fuel efficient that went AOG effectively aren't going to come back. So in one way, what has happened in the pandemic is going to happen. And we know what we're talking about there. We're talking about the B737 Classics, MD-80, MD-90. There's numerous examples that we'll see change. And particularly in North America, where the airlines tend to have such an aged fleet, it's the largest domestic market in the world, any kind of step change there will clearly have an impact. So on the one hand, we have technology and what's happening there, and it's very actively happening to try and address this goal from 2050. You've two other elements that don't get talked about as much, but are very, very important before we get to the fourth one. And one is really around traffic management. And it's interesting because there was a Eurocontrol session on sustainability 3 weeks ago, and a lot of the industry leaders were talking, Michael O'Leary from Ryanair, Willie Walsh, and one of the comments made, I noted that, is that, you know, this idea of one skies in Europe, because there isn't a coherent approach to traffic management in being more efficient, we could be leaving, there's an opportunity there of double-digit savings from an emission point of view, and things like continuous descent. There's various things that can be done there. So again, these have to be driven because they will contribute to getting to that 2050 goal. We've seen a fair bit around, you know, from a regulatory point of view in terms of some of the aviation taxes that have been applied. If you look in 2019, Ryanair paid, I think, just over 700 million in taxes. But the comment made was they're happy to pay that sustainability tax. But actually, was any of that money used towards sustainability issues? And their argument was no. So that's obviously a challenge. The fourth element, which, be it if you look at the research coming out of the OEMs, if you look at what the airlines are saying, even within the leasing community, clearly sustainable aviation fuels is critical. And, you know, the Airbus view was that SAF will be about 60% of the reduction required by 2050 will come through SAF. And again, I'm bringing these points up, Joe, because this is what investors want to hear about. They really want to understand. And when, you know, when we talk to them about what new aircraft look like or modern, they want to understand what the savings are made. And yes, there's an element of are they prepared to penalize on older aircraft in terms of what financing might be available versus new? I think the answer to that is yes, and it's only going to become more of an issue and more of a topic going forward. But to solve this problem, and it is the greatest challenge for aviation, if you think about it, in many ways, it's like the challenge around safety in the 1980s, where all players in the industry really had to, you know, make a fundamental step change. Those four areas are going to be absolutely massive. And even again, just to talk about sustainable aviation fuel, because it's so critical in that you have a number of different types of SAF product available, but the reality is some of that product is available today. But there's two great challenges that have to be addressed by the industry. And one is the capacity production that's available, and the second one is the price. Now, solving the first one in many ways will help the second one, because there's going to be such massive demand for this product over the course of, you know, the next 30 years to get to where we're going. So this is, I would expect, Joe, hopefully you and I are talking again in 12 months' time, the industry will have made real progress on this topic. And that's so important because it all ultimately flows back to the investors coming into the space. And even recently, you know, what was one of the proclamations from Ryanair, I think, was to get to 15% sustainable aviation fuel by 2030. We've seen Etihad make pronouncements. We've seen Lufthansa make pronouncements. People are getting on board with this, and they have to, because this is absolutely going to be the biggest topic in aviation for many years to come.
No, I mean, fully agree with that. And you're right that the SAF building block, it's the current one. You know, we can talk about technological changes, but they are a long time away. And it may be sooner than we expect, but SAF is there. You know, it works, as you say, cost and production, and how you can kind of encourage that are key, right? And very curious on your thoughts around investable metal at this stage. And I think that the hymn sheet is narrow body new tech, right? And I think if anyone can go anywhere, that's where they want to go, but that's where clearly all the dollars are going. So a very, very competitive environment. Outside of that, as you think more broadly on the types of metal that you view as investable and attractive, what's that look like?
Yeah, look, you can't get away from what we're all seeing, and that is, of course, the sweet spot for people is the moment is on the narrow body side. It's on the modern, you know, fuel efficient aircraft. And again, we talked about it there. We could see that's where the recovery has been seen in asset values and lease rates. But, you know, fundamentally, we still think there's some really good products, particularly if you get into that midlife space, that in time, investors are going to look for a little bit more yield, or are struggling to get into that first young modern space, and are going to be very interested. There's going to be good opportunities in that. But of course, the background of that, Joe, has to be the continued recovery in aviation. We've got to keep seeing, as I said at the start, you know, current forecasts see us getting back to around 80% of the 2019 levels. We want to see that in 2022, but when we talk to investors, it's not just about 2022. It's look, where do we think this industry is going to be in 2025, 26? What might you get into now that will give you a very good opportunity for return by then? And certainly that midlife space, you know, you might 737-800s, a number of the A320 range. There's some really attractive assets in that we think are well priced at the moment. But again, you've got to take a view on where you think you're going to get back to at lease rates, etc., in the future. But there are plenty of investors out there that are very interested in doing that. Look, in any disruptive, doesn't matter what industry you're in, whether it's technology, aviation, telecoms, this kind of disruption creates opportunity. Was the safer bet might be on that newer modern side, and that would always have a part in any portfolio. It depends on the investor appetite for risk as well. But given, as I said, you've probably heard it 100 times in your interviews over the last number of weeks, you've got to go back to the fundamental of this industry. Does the consumer want to fly? It's as simple as that. And we have shown emphatically over the last 18 months, once restrictions are lifted or vaccination rates increase, the answer is emphatically yes. So that's an important part of analysing where those future opportunities might be.
And just in closing, David, as you say, we've come through the most challenging period hopefully we're ever going to face in aviation and wider aviation finance. What are your optimism levels like as you look out into 2022?
Yeah, so I think two parts. For our business, as I said to you, we've had a really strong year. When we look back at the scorecard of the year, what the team have achieved, you know, having that platform that's, yes, experience, has been through cycles before, but it also, as you mentioned, you know, has completed a number of transactions, be it ABS, its funds, etc. We love where we are. The fact that we really grabbed technology and wanted to use it as an enabler in our business to help us with asset pricing, with assessing risk, is very positive. Now, layer on top of that, kind of some of the wins we've had in the second half of the year, we think we're in a really good position for growth into 2020. So from a business point of view, we're very, very optimistic that, and again, we're relatively COVID clean, Joe. We don't have a large legacy order book that we have to deal with placement of in the coming months, etc. So it really lets us kind of put our heads up and look at what's coming in the future. My overall positivity on the industry remains intact. We've seen such progress through the year. It's, you know, backed by the numbers and growth. We know there's going to be bumps along the way. We know until the world is at a much higher vaccination rate, unfortunately, we're going to deal from time to time with the emergence of a variant, etc. But what we need is kind of rational behavior when that happens, as opposed to some of the knee-jerk reactions we've had from governments who are typically going to take the populist view on things, and that's just the reality of life. But the fundamental underlying principles of the business remain very, very strong. And look, we've come through a hell of a lot as an industry, haven't we, in the last year and a half? Generally speaking, have come through unscathed, in many cases with stronger platforms for the future. So we remain, and I remain very, very positive about what's ahead of us in 2022. And, you know, please God, you and I will be having this discussion in early 2023, and we'll be looking back going, great, we're now almost back to getting towards those 2019 levels. Huge progress around the world becoming vaccinated, some level of normality in aviation. But as I said, definitely the glass is definitely half full, Joe, I think is the best way to look at it.
David, on that positive note, and hopefully next year we're doing this sitting across from each other rather on Zoom. I'd like to thank you as always for your time and your insights, and wish you and Seraph the very best over the course of the next 12 months. Thanks, David.
Joe, thanks to you and all the team in KPMG and Airline Economics. Take care.